Ladies and gentlemen, good day and welcome to the Torrent Power Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Lalit Malik, CFO, Torrent Power Limited. Thank you, and over to you, sir.
Thank you. Good evening to all of you, and thank you for joining earnings call of Torrent Power for Q3 FY23. First, I'll take you through the performance of the quarter, after which phone lines will be open for question and answer session. I'll explain the performance of the company at PBT level first, and will take tax expense separately thereafter. Reported PBT for the quarter stood at rupees 977 crores as compared to rupees 509 crores in the corresponding quarter of last year. Increase of rupees 468 crores, that is 92% on reported basis. There are no non-recurring items in both current quarter and corresponding quarter of last year. I'll now take you through key highlights on improvement in the PBT by rupees 468 crores for the current quarter. The improvement in the operating profit is mainly coming from 1. Improvement in profitability of gas-based power plant on account of two factors. First is the net gain of rupees 397 crores coming from sale of LNG, which, as discussed in earlier calls, with elevated LNG prices, it makes commercial sense to sell LNG instead of converting it into electricity. And second is the gain of rupees 35 crores on account of lower depreciation charge in DGEN on account of one-time impairment charge taken in Q4 of FY22 and reduction in depreciation rate in SUGEN. So in total, including above major factors, profitability of the gas-based power plants improved by rupees 435 crores. Second, moving on to performance of distribution business, pursuant to restoration of industrial demand, which was impacted last year due to COVID-19 pandemic, there was marked improvement in overall contribution from the distribution business by rupees 122 crores. Major factors of which are given below. A. Gain on account of reduction in T&D losses of rupees 45 crores. B. Volume and rate gains from franchisee business of rupees 19 crores. C. Higher ROE and incentives in license distribution of rupees 26 crores. And D. Higher contribution from new acquisition of DNH and DD of rupees 32 crores. Next, renewable business of the company witnessed an increase in contribution mainly on account of three factors. 1. Profit booked on account of acquisition consummated during last 3 quarters amounting to rupees 21 crores. B. Partially offset by lower contribution approximately 3 crores from existing plants mainly on account of lower PLF and non-availability of 50 megawatt of SECI 1 wind power project for part of the month owing to EHS tower failure. Therefore, in total, profitability of renewable power plants has increased by rupees 22 crores. Next, increase in finance cost of 71 crores, which is mainly due to increase in average borrowing by approximately rupees 2,700 crores. Increase in depreciation and amortization expense by rupees 18 crores and increase in other miscellaneous expense rupees 15 crores. Moving on to after tax numbers, Consolidated profit after tax reported for the quarter is rupees 695 crores as compared to PAT of rupees 369 crores reported in the corresponding quarter last year, which is higher by rupees 326 crores, that is 88%. This was all about the financial performance of the company during the quarter. Now, moving on to the operational performance of the company, distribution business witnessed an year-over-year improvement of approximately 3% in overall demand. While the T&D losses for 9 months ended December 22 at Ahmedabad, Surat, Dahej and Bhiwandi have remained stable, losses at Agra and SNK have remarkably reduced, mainly due to continued focus on loss reduction and recovery activities. This completes the overview of the quarterly financials and operating performance of the company. Now moving on, we'll give a brief update on current projects which are under pipeline. 1. Commissioning of 115 megawatt of SECI 5 has been slightly delayed owing to delay in construction of EHV line due to factors beyond control, and same is expected to get commissioned by April 2023. Necessary application for extension of SCOD has already been made to SECI. Second, TPLD 300 megawatt solar project, on the other hand, has picked up some pace as due to recent reduction in module prices. LOA has been issued for procurement of modules. MNRE has also issued a notification to extend the SCOD up to March for all projects bid before March 2021. This will allow us sufficient time to execute the project. Next, 300 megawatt of SECI 12 wind project maintains status quo. The project was won by the company in Q1 FY23 and LOA for the same has already been received. PPA is expected to be signed in due course. Next, moving on to distribution segment, the company has made an application for grant of parallel distribution license in various areas of Maharashtra, including Thane and Palghar, Pune and Nagpur. MSEDCL is the incumbent licensee and will continue to remain a licensee. Once the license is granted, the consumers will have an option to choose any one of the licensees for power supply. That's all for this quarter. Now I would request coordinator to open lines for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah, good evening, sir, and congratulations on another good set of numbers. So first question is on the, can you please share the duration of contracts for the LNG which we have right now, and how much is there for this fiscal? And is there something which is available for the next fiscal also?
Mohit, I'm Saurabh. So as updated during the last quarter, since energy prices are higher, there is no further contract we have we executed in the last quarter. But on overall basis, about we have a contract, existing contract with IOC and Reliance Gas. They had about 25% of the capacity is contracted for our gases, Sujan and Uno Sujan power. Right? Another 3 cargoes we have booked every quarter for next 4 years. which will cover another 25%. So overall, Sujan and Unosun for the 50% of the capacity for the calendar year, next calendar year we have contracted.
Understood. And secondly, can you please share the EBITDA contribution of the businesses during the quarter?
You can note down. The gas for the EBITDA for the current quarter is about 678 crores. Was 1,600 crores last year. The increase of 378 crores. Out of which, as we explained, about 395 crores is on account of the LNG. 397 crores on account of the sale of gas. And renewable is current year is 161 crores versus last year 114 crores. So increase of 57 crores. Access distribution business EBITDA is about 427 crores versus 352 crores. About an increase of 75 crores. We include Daman and Diu also. New area which was not the last quarter. Then the franchise distribution area of Agra, Bhiwandi and S1K has contributed 255 crores in Q3 of current year as compared with 206 crores of last year, increase about 49 crores. And overall reported PBT, EBITDA I would say, is 1,128 crores versus 1,000 crores last year. It is increased by 528 crores, about 53%.
Understood. Lastly, sir, what has changed in last couple of quarters that various private companies like us, they are trying to apply for parallel distribution license? Is there something understanding a change of the Electricity Act?
No, we find the opportunity because Maharashtra is a fairly good area and quite regulated area. I mean, the regulator is quite good, I would say, same like Gujarat. And the demand, if you look at the three areas which we have applied for the second license, like Palgad and Thane, Palgad and Nagpur and Pune. So those are the area where we find industrial demand is almost 50%. So we find this area is attractive and the regulatory mechanism is well placed in Maharashtra, I would say. So we find a good opportunity there to set up our network there. And slowly we want to capture the market in these three areas also. This three area, if you look at is almost some areas larger than Ahmedabad. And Pune, for example, we have already city gas distribution. We have city gas distribution like in Pune. So we have good presence in Pune also. As well as Palgad and Thane, because of Bhiwandi and SMK area, it's very near to our area. So there is a synergy, I would say, in case of Palgad and Thane, as well as Pune also.
And we can also add our efficiency through our past experience, which will be beneficial for the consumer.
And so basically two-part tariff. There's a cost plus tariff basically top of it. So it's not like a franchise kind of a distribution area. So though the T&D losses in current distribution area is it's not like our franchise area, so it's lower. It's a two-part tariff is available, cost plus tariff is available. That is one other advantage to us.
Understood, sir. Thank you and all the best, sir. Thank you.
Okay.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Girish Achhipalia from Morgan Stanley. Please go ahead.
Thank you for the opportunity. Just one question on this acquisition news on renewables. So there was discussion about 350 solar and 750 wind, I guess. Where are we right now in terms of this development happening or not happening, or have you called it off? Can you just provide some color around this?
Which acquisition you are talking about?
The Renew Power 1.1 gigawatt.
Yeah, it's an NBO stage. So further progress needs to be made. But currently the preliminary stage, NBO stage right now.
Okay. Fair enough. Thank you.
Thank you. The next question is from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity. So a question on the LNG sale, that LNG trading which we have done. So, sir, the profit which we are booking from the LNG sales, are we adjusting it into a regulated business because we are buying the power from the market? So how is this adjustment being made?
It's basically merchant LNG, so it's basically independent of the regulated things basically.
Okay, so it is not included in our regulated business. But the gas which we were procuring for Sugen and Sugen. So I'm just trying to understand because the contracts that we have is for generating for our regulated business, but the sale which we are making through the trading that we are not booking or adjusting in our regulated business. So
it's a merchant LNG we are using basically.
Okay, sir. Okay, we are not using the allocated sale. Okay. And sir, so going forward as well, so this run rate of around 400 crores for a quarter, because we currently have around 3 cargoes booked for every quarter, and
and for the calendar year, not every quarter, every calendar year.
Okay,
so calendar year 23.
Okay, so will this run rate continue to be on similar levels from LNG sales, LNG trading?
Depend on the opportunity available. So we as you know, we collect the spot price of LNG was pretty high during last 9 months. So we find it good to sell LNG rather than generate the power. So as you notice, the LNG price is coming down. So,
yes.
So it depends on the opportunity available.
It may not continue the same way. It all depends upon the pricing and the availability.
So what is the threshold price below which we'll go for generation instead of trading?
It's a dynamic situation. So at what price we are getting LNG and what is the market price? So dynamic. We can't put any threshold on LNG. So basically, it's a dynamic situation. We have to see the opportunity coming in and then accordingly we have to work.
Okay. Understood, sir. And sir, how has been the receivable situation? So could you give us the number at 9 months in?
Which number?
Receivables.
Receivable numbers we don't have right now, so we can give offline if you want.
Okay. And sir, the capex number for 9 months?
That we can provide.
Yeah. I think the capex number for YTD 9 months is around 2,298 crores.
Okay.
Total cap. Yeah.
Okay. And sir, so the run rate, the number which you told for next year, so for distribution, the license distribution business, around 1,200 crores and 300 crores for the distribution franchise business.
Yeah, that's a valid number.
Thank you so much, sir.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
Thanks for the opportunity, sir, and congrats on the set of numbers. So, sir, can you just first tell me what is the current capacity, renewable capacity that we have, and what is the under construction capacity?
The renewable capacity, commission capacity, I would say, is 1,068 megawatt. And as we updated in the call, we have about 715 megawatt capacity under construction.
Okay. And so, is there any conscious effort on our part to acquire assets rather than developing new assets?
Yeah, we are working on the opportunities. As you recollect, last year we did some acquisition of about 235 megawatts kind of things, 281 megawatt. So it's basically we are continuously evaluating the opportunity as far as acquisitions is concerned, as well as new projects are concerned.
So we won't be developing any projects on our own?
No, we are. We are developing. There are 715 megawatt of capacity in the construction.
Okay. And so, can you just give us the RP obligation for all the distribution license areas that we have?
The obligations One second. We can come back to on the RPO obligations.
I'm sorry, sir, I didn't get the last thing.
We will come back to you.
Acha.
Right. We will give the details offline.
Sure, sir. And then just regarding the parallel licensing. So, sir, now that we have applied for the license at 3-4 places, so what are our plans? Will we be setting up a new infrastructure, or will we be using it with the current distributor?
No, see, second licensing concept means you have to set up a new infrastructure. Like the Dahej is an example where original license was state discom, and we have Dahej FEZ, I would say. So we have put a new network there in Dahej FEZ, and we capture means all the customers at Dahej FEZ is with us rather than with the state discom. So similar thing means we have to set up the new network basically.
Understood, sir. And just a final question. Suppose if we are given the second parallel license, so what timeline will it be required to cover the entire city area to develop our own infrastructure?
It is a long-term thing, I would say. It's not happening. It cannot happen in a very short period of time. So maybe 5 years plus period is required to set up the network.
Okay. Understood, sir. That's it.
Thank you. The next question is from the line of Rahul Modi from Nippon India Asset Management. Please go ahead.
Good evening, sir. Thank you for the opportunity. Sir, just to understand the previous person's point of discussion. So when you're setting up a new license, when you're setting up a new network, so does it fall under a regulatory regime, or this will be our capex, and how will be the risk mitigation in terms of obviously the target will be to be more efficient and have a much better power supply mechanism. So how does the capex be? Means it will be how will it function under the regulatory regime? If you can explain.
It's a regulatory regime only, like what we have in Ahmedabad, kind of a thing, Ahmedabad, Surat kind of areas.
Okay, so means, so for example, if there's someone who's invested 1,000 crores already, they've got a asset base, and you set up another 300 crores. So the customers get charged on this 1,300 crores?
Well, based on our regulatory filings, what we have incurred, because like same procedure what we undertake in the Ahmedabad and Surat area. So ARR, we have to submit the ARR, and then the tariff will be determined by the regulators. Same procedure.
Okay, so sir, is there any overlap in the network laying? How does it work? Because I'm just trying to understand a little better. That you are
overlap. There will be overlap because there will be parallel networking. Like state discom network will be there, our network will be there. So it will be parallel network will be there.
Okay, so sir, now this cost that gets loaded, for example, what is the incentive of the regulator to allow that? Is it city like Pune, for example, which may be not so inefficient? So to have a parallel licensee and loading up the cost, because this is not only happening in Maharashtra, as you are going in Maharashtra, but it's happening across India. So just to understand this concept a little better, that will it lead to higher tariffs eventually and obviously better quality of service? Is that the right way to understand?
Better quality of service, lower cost of power, those are the benefits consumer will have.
Okay. And sir, as you mentioned that you got an IOCL tie-up, for 25% and another 25% you've got with RIL. So what would be the approx cost that we are getting at the current crude slope?
It's linked with the brand IOC, and as for Reliance, the link with the brand slope basically. Yeah. We will not actually update you about the slope, but it's basically linked with the brand.
Got it. So just to understand currently, if today we have to use this power, what would be the tariff?
We'll not comment on this right now.
Okay. Just last question on my side is, sir, your 4,000 plus megawatt target of renewables remain? And if yes, sir, when are you planning to achieve this through organic and inorganic?
So we set up about 2025, 2026 to achieve this kind of a capacity.
Okay. That is 4,500 if I'm, or 4,000 if I'm not wrong.
Yeah, yes, you are right.
Okay, sir. Thank you.
Around 5,000 is what we were looking at in the next 3 to 5 years.
Okay. Thank you.
Yeah.
Thank you. The next question is from the line of Akhilesh Bhandari from ICICI Prudential AMC. Please go ahead.
Yeah, so thank you for taking my question. My first question is on the parallel distribution network. So MSCDCL already will have some PPAs they're using to supply power to the areas. So how will the allocation of PPAs now work? Do you get to pick and choose some of the PPAs, or do you go out and find fresh PPAs? How does that work? How do you have
what we said is a parallel licensing. So we don't have to use their PPA. We have to do our own arrangement for the distributions, procurement of the power. This is not a kind of a sharing of network. We will have a separate network. So their PPA will be independent of our power procurement arrangement.
It's like, you have your telecom channels. You can have RIL, you can have Vodafone, you can have this. So, you have a parallel infrastructure. And
we are not sharing their network. We are plan to set up our independent network.
Just a question on the entire, general question on the entire thing, because the duplication of network and duplication of PPAs for the same area has the potential to make the entire system more inefficient. You're adding more cost structure in a fixed cost environment. So to get the approval, do you have to show, let us say, some benefit, some fixed benefit to the user in terms of a tariff reduction in order to get the approval? I mean, what are the merits on ways in which this is decided by the regulator? Just your thoughts on that.
We have to demonstrate lower tariff, lower T&D losses, better services. Those kind of a tangible thing we have to demonstrate.
Understood. Got it. Thank you.
Thank you. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Hi, good evening, gentlemen. A few questions. The 395 crore EBITDA from the LNG, what was it corresponding period last year? And if you could also help us with the data for 9 months for this fiscal and the previous one, please.
9 months. Yeah. 9-month number is about 641 crores.
Sure. And corresponding period previous years, please.
It was about 107 crores last year.
Okay. The second question, we have seen a sharp reduction in the AT&C losses at our franchisee. You have earlier in the calls communicated about a rule of thumb. Is there a change now? I mean, for every percentage reduction in the AT&C at the franchisees, what is the incremental profit that flows through to the EBITDA or PBT?
There is no change in their assumptions right now. The same assumption can continue.
Sure. The third question is a continuation of the previous participant. So in Ahmedabad, we have about 350 square kilometers of our license areas, and over time, cities have expanded manifold. Are we also applying for the extended version of the city, which like in theory could be the easiest one to track because you are already present?
So currently, it's too premature to talk about this, but yes, city is growing. We are expanding. Demand is increasing by 5-6% every year.
Okay. So the question was in terms of as the city expands beyond your license area, and which may in turn fall in the state discoms having, is that also an opportunity that in theory we could assume that can come to us?
It is an opportunity, but city, it is an opportunity, yes, for us.
Okay. The last question from my side. There have been news reports on promoters bidding for PNCLT for Reliance Capital. Now, historically, our track record has been impeccable in terms of no related party transactions. Can we assume the same to continue?
We will not be able to comment on the Reliance Capital at this moment. I think, Bhavin Rishi, I think your question is more on the any Torrent Power linkage with Reliance Capital?
No, the question is the related party transactions till date has been pretty clear. There is no loans. The only related party we see is dividends or the remuneration. Can we expect the same to continue, or like can this entity be used to?
Absolutely. So this transaction is being envisaged at the parent level, not at the any operating company level, and that discipline would definitely be maintained going forward also, which we have seen for last 20 years.
Great. That's
independent of the Torrent Power. This transaction is independent of Torrent Power. It's not nowhere it is connected.
Sure. So the question was only for Torrent Power and the related party. That's very reassuring. Thank you so much. These were my questions.
Thank you.
Thank you. The next question is from the line of Harsh Dole from IIFL. Please go ahead.
Hi, thanks. My question is actually same on the parallel distribution licensing. While it's good to know that we are going quite aggressive in terms of new areas, have you heard anybody applying for license, parallel license in our bread and butter Ahmedabad and Surat businesses? A. And in case somebody applies, what is going to be a strategy to ensure that the incremental growth is not lost? And second part is basically, what timelines can we expect in terms of rollout of the network, and what regulatory approvals are necessary, and at what stage are we? Thanks.
So, Harsh, see, if you look at the scenario, so see, we in Ahmedabad and Surat kind of area, we are efficient, okay? Our services are better, tariff are competitive, T&D losses are lower. So this kind of a parallel licensing will be more attractive where the state discoms are operating. Like, for example, whatever area we have applied is a MSCDCL, they are operating, which are inefficient area. So there is no point of, for any distributor who will come in an efficient area and compete with us, because he will not be able to compete with us because of a sheer efficiency of the private sector players. So this kind of a model will work only where the state discoms are operating, and they are inefficient basically, I would say. Their tariffs are inefficient, the tariff is higher, T&D losses will be higher. So those kind of area, this kind of a model will work, not in Ahmedabad kind of a model, I would say.
And in Ahmedabad and Surat, we are at the lowest in terms of the T&D losses also. So therefore, further efficiency on that would be limited for anybody to look at. On the other hand, with government, there would be opportunities.
So these will be a differentiating factor between current private sector players and the public sector players, state discom, I would say.
Understood. Very, very well appreciated. If you can comment on the timeline and what regulatory approvals are necessary, and at what stage are we?
Timeline is difficult to say because we have applied for it. So normal process MERC will do, like for example, they invite public comments, they will hear the objections, So all those standard process they will undertake, and accordingly they will do the public hearing kind of things. And they will consider all factors, technical capability of the newcomers basically, financial capability of newcomers. All these factors they will evaluate, and then they will take their decision.
Appreciate. And if I can squeeze in one more question.
Yeah, you can.
So in general, we have seen that the capital costs for the renewable projects have gone up, and the interest rates are what they are. Now, in your opinion, do your tariffs or in general new projects which are being bid out, those have adequate margin of safety to adhere to our capital allocation norm, or there is some rethinking in that bidding strategy?
No, as we told earlier, we are expecting low in IRR for these three upcoming projects. So that assumption is continuing. Like for example, 300 megawatt TPLD project, module price went up to say 28 cents kind of a thing. Now it is coming to 19 cent kind of a thing. So we have contracted it, or we have committed, we have contracted because it is reaching our IRR range. So we have contracted the model for the 300 megawatt, and we are going ahead with the implementation. So things are coming back to normal level, I would say. So that is why we are executing these projects.
Great. Thank you very much. Thanks.
Thank you.
Thank you. The next question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Yeah, good evening. Sir, how much of this LNG sale will happen in the upcoming quarters? Will we be able to sell this merchant LNG from the 3 cargoes we have won?
We will not able to give any future guidance for us.
So what am I asking is, in this particular quarter, are we continuing to do it?
That is why I'm saying we will not able to give future guidance. It depends on all opportunities available to us at given point of time.
So right now there is 50% gas available for generation, right, sir?
For this calendar year, yes, 50% gas is available for fusion and no-fusion project.
And the 3 cargoes imported that we have booked, it's available till December 2026, correct?
The 3 cargoes which we booked is basically to target a summer requirement. So it is for the Q1 of the next year. We are targeting. Every year it will be. So every year, 3 cargoes available for the next 4 years. Means 3 multiplied by 12 cargoes, I would say. But current year 3 cargoes is for meeting the summer requirement.
I'm not able to understand. So can you clearly tell for how much capacity of gas do we have gas for FY24, FY25?
So 50% gas is available for our fusion and no-fusion requirement for the license distribution area.
Okay. Okay. And this is the IOC Reliance gas plus the imported gas?
Yes, exactly.
Yeah. Okay. And we are free to sell the imported gas if we don't convert it to electricity?
Yeah, that opportunity is available. It depends on the what is the cost of the gas, what kind of a tariff we are getting. So it's basically depends on the opportunities available.
Okay. Next question is on the parallel distribution licensee. How much of capex will be required to create this parallel infrastructure, example, say in the city of Pune over the next 5 years?
5 years, I would say one can put the numbers about 4,000 crores, 5,000 crores capex could be there for Pune kind of a cities, I would say, for next 5 years.
Okay. So regulated equity would be, say, about 30% of it?
Yes.
Okay. Final question is on the EBITDA. So can you give the EBITDA from the new distribution franchisee areas like Dadra, Nagar Haveli separately?
We will not able to give. We have given the combined number. So combined license distribution number EBITDA we have given, which we say that it will be about 75 crores, means 427 crores current quarter versus 362 crores last month, compared to quarter of last year.
Okay. Okay. Thank you, sir.
Thank you. Participants, to ask a question, you may press star and one. The next question is from the line of Rahul Modi from Nippon India Asset Management. Please go ahead.
Sir, can you help me with the amount of regulatory assets that have been approved and pending approval? And now, how are you getting comfort with the regulator in terms of liquidation of the same? Thank you.
$1,500.
Yeah, about 1,500 crores is up.
And sir, any liquidation targets of this? And the unapproved part?
Unapproved is a disputed one it is under disputed one, I would say.
What would be the amount?
600 crores.
Okay. And sir, any regulators indicated any liquidation plan for this?
We are working with the regulator, so we are hoping that it should be recovered in next 2-3 years' time.
Okay. So sir, how has the trend been? Is it been flat? Has it been increasing or it has been slightly declining?
It is increasing.
Increasing a little.
It is a bit increasing.
I think,
But not too much.
Just to add on to that, if you look at, if you remove last year or this year, I mean, there has been an decreasing trend in the regulatory assets. So basically, regulatory assets were going down, but this year, because of higher gas prices and higher all over electricity prices, the regulatory assets have gone up. So it's difficult to tell you up to what time we'll be able to liquidate this regulatory assets. But if you look at to remove this year, then it was a decreasing trend.
Okay. Perfect. That's all from my side. Thank you.
Thank you. Participants, to ask a question, you may press star and one. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thanks. We wish everybody to stay safe and healthy. We thank you and hand over the call to the operator.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Torrent Power Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Thank you, sir.